Assalamu Alaikum everyone, welcome back to another video. I hope you're having a wonderful day. In today's video we are looking at one of the companies that I own in my portfolio. The reason I want to look at this company is because I haven't actually looked at it for a while. I have been buying it, basically stocks, just here and there wherever I can in the last few months, but now I feel like it's so undervalued. I should be focusing more and build that that percentage to at least to be 4 or 5% of our overall portfolio, because I really genuinely think this is one of the companies that I want to own for a very long time. And the company that I'm talking about today is this company, is Public Storage. Okay, this is a REIT. I don't own any other REITs apart from this one. The REITs are real estate investment trust. These are companies that are actually basically obligated to pay dividends and pay 90% of their money as a net income to shareholders. Okay, so what they do is they obviously own loads of properties. They either rent it out to basically other companies, or this, like this one here, they actually have a storage units that you can actually just normal people can rent and other companies can rent and so on. So what I want to do is look at this company today in more detail to see if it's actually undervalued. I've had it in my portfolio for a while. I want to make sure if basically to see if it's actually undervalued at the moment, and if it is, obviously I would like to build this to be at least a 5% of all portfolio, inshallah. Before we do that, as always, please like the videos because it genuinely helps. It takes a lot of time and effort to put these videos together, and I would be really appreciative if you could can just click that like button and subscribe to the channel. Let me know if you have any questions, and obviously join us on the Discord where you get access to all of these things, including the Sharia compliant investment ebook, which basically is something I've included there recently. Okay, right, let's go back to the company. So like I said, the company is a REIT. Okay, they basically been around for over 50 years. They have a credit ratings from Moody's that are A2, and from S&P and Global they have A. So that is a rated company, which is absolutely great. Their total trailing 12 months revenue was about $4.2 billion. They have net income of $3.1 billion. Okay, they own loads of different properties. They own so many square feet of land. They're in 40 different states in the United States. They have 1.8 customers around the world, and they're not just based in the US. They are also based in Europe and other countries as well, in Europe and other continents as well. Now there's a lot more information. This is the investors section, okay, but you can find out a bit more information on basically by going into that website. And they're trying to deliver the digital customer experience, so they're changing a lot of things, making have a lot of more technology based, where you can track your devices and all of that stuff, and you can check what's going on with. If you store something somewhere, then obviously you want to make sure that it's safe and it's there and so on. Now, one of the things that I've actually when I was looking at this presentation, I've seen is they have, obviously when it comes to the same store margins, they got almost 79% in comparison to all the other companies. Okay, basically they're doing better than Extra Space, they're doing better than CubeSmart and so on. Now I watched a documentary, well, it was kind of like 20-minute video on CNBC recently, and apparently there are now new companies coming on the market. Basically there's a website where you can go and you can rent. Basically, instead of going to these companies, one of the things that's happening is there's a website where if I had extra space in my house, I can go to that website, register, and if you needed space, you can rent that space from me. So I don't know how secure that is, but that is the newer kind of initiatives that's starting that could potentially distract this. But again, a lot of people will probably be more happier and know that the security side of it is actually better for them to store it in with public storage in these companies instead of just someone else's house. So there's a lot of information in there, but one of the things I actually like is the same store lease basically property is about 76, acquisition basically they're buying new companies about 13%, development is about 4%, and redevelopment is about 7%. So this is the total owned property by property type, if you like. Okay, so there's a lot more information, like I said, that you can actually dig into. But what I want to do right now is to look at the financials of this company. Okay, so let's have a look at that. Currently trading $292 per share. 5-year basically return is about 26%, and EPS is $23.50. Market cap of $51 billion. The economic mode side of it is none. Beta is very, very low, which is quite good. And funds from operations, okay, is about 60. We don't use PE for these type of companies. Those who REITs, you use fund from operations, and you can find out this type of information here. So if you go to Seeking Alpha, for example, and basically you can see here funds from operations forward and so on, you can find from there. So this is a equivalent of PE, and this is equivalent of forward PE. So both looking at this, it actually looks basically quite low. Now, in terms of dividend, this is where the company shines, okay? So annual dividend over 4%. The payout ratio is 64%. Latest increase was 50%. But having said that, they haven't actually increased this dividend for a very long time. I think they cut it recently. That's probably why. They haven't got a basically 5-year growth rate. The annual payout is $12 per share, and dividend safety on 96%, which is absolutely amazing. The free cash flow here is $2.7 billion, and free cash flow yield of 6.3, and free cash flow margin of 54%, which is absolutely huge. Okay, but obviously it's a REIT. Profit margin is 96%, operating margins of 52%, return on basically equity is 44%, and total return in the last 10 years, we're looking at about 10% here. Okay, so that's percentage. Return on invested capital, about 13%. Revenue in terms of the last 5 years, we grew about 10%, and current ratio is way above 1, which basically means the company has enough cash to pay off any liabilities in the next 12 months. The next year, they're expecting the earnings to grow about 6.5%, and after that, every single year, 17%, which is absolutely huge for a REIT. Okay, current price $292, and fair valued from Morningstar is $326. So that means it's 10% discounted right now. Fair valued $395 from Simply Wall Street. That's about 26% undervalued. Tip rank is almost the same, 329, about 12% undervalued at the moment, and Seeking Alpha more or less the same, 15% and upside in the next, basically for this year. Now, Seeking Alpha is actually saying it's a buy this stock, and when it comes to business activity, this is one of the reasons I own this company is because all the other REITs where they have high interest bearing debt and high interest bearing securities, and for that reason, like, they can change it very quickly. Okay, so with this one, alhamdulillah, is quite low in terms of interest bearing debt, and interest bearing securities are almost non-existent. Now, in terms of shares outstanding, they haven't been buying back their own shares. So as you can see here, they've got like 2 years where they haven't actually increased, but then they increase a little bit to buy back their own shares, or maybe to acquire other businesses. I'm not sure why they have increased it there, and then they increase it a little bit again, and then basically for the last 3 years they haven't increased it. I'm hoping basically from now on they will be buying back their own shares instead of issuing more shares of the stock. Now, if we look at ratings from Seeking Alpha, okay, if you look at, for example, quantity is actually strong buy, 4.5. When you look at the Seeking Alpha, okay, analyst is actually 3.6, which is basically a buy, and same goes for basically Wall Street. So all of them agree either it's a strong buy or a buy right now. And as you can see here, Seeking is about 15% upside from where it is right now. Now, a couple of more things that we need to look at. We need to look at the earnings estimates. Okay, so going forward, so 5%, 6%. Okay, so for a REIT, that's actually quite decent. Okay, and then when we look at the revenue, 7%, 4%, 5%, 1%. So if we just focus on the first 4, look at this, right? Any other company, you will see at least 20 different analysts looking at this, looking at basically this stock. But there's not that many from Wall Street that are interested in this company. A lot of them because it's basically is REIT, and it's obviously because it's not a high flyer. So overall, I'm quite happy with what I have so far, and I've got, how many shares do I have? I've got 12 shares, okay, of this company. And like I said, I want this company to be at least a 5% of overall portfolio, inshallah, in the long run. And what I'm going to do for the next few weeks while it's still undervalued, because if you're looking at this and you can tell it is quite undervalued at the moment, and according to everybody else in here is saying it's actually undervalued. So I will obviously add my margin of safety. And my margin of safety is actually fine right now because I'm actually quite about 9% down. So my average is $305 per share, and right now it's just $292. So what I will be doing is I will be buying a bit of this company in the next few weeks, just to kind of make it about at least 5% of all portfolio, inshallah. And that is what I'm going to do in the long term. Again, if you're interested in this kind of company, obviously do your own research. Don't rely on what I've just said in here. Okay, there's a lot more information that you can find from their website. There's so much information on their actual website. Learn more about the company. They obviously, this is the holding company, but there are smaller companies within that as well. So you need to know what the names of these companies are and where they are in around the world and so on. So there's a lot more information. I think when I first analyzed it, I looked at those things, but today actually I haven't looked at that. But you can find a bit more information about this company before you even look into it, inshallah. Anyway, that's what I wanted to share with you guys. Like I've always said to you guys, I'm being transparent to what I'm doing, and I will be adding more to this company, inshallah, in the next few weeks. I just wanted to share that with you guys. Have a wonderful day. Assalamu Alaikum.